Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
But the inverse happened. Instead of gaining an advantage, suddenly the export of Germany, not only within Europe, but also to the rest of the world, was increased very much. And this happened because the Spanish worker, the Greek worker, the Italian worker cannot compete with the German. They are much more efficient. They use technology better. They have many advantages. So what I think in the future will happen, I think exports from Germany to the south would be decreased, but the problem still remains for the south. There are no investments. They are not industrialized at the level of Germany. It will be tough.
Wow. Sounds like we need Jack Crooks, that an often presenter here. He says that the currency was something that created the pressure valve, and now that you don't have it, that's what he was always saying in many of his presentations, that it was a problem because you don't have this currency devaluation potential. You can't devalue. Well, what are you going to devalue?
Exactly. The devaluation was a weapon in the hands of weaker economies. Every time they had a problem, there it is. They were devaluating, and that's it. Now, this is the first time that the IMF, that the Eurozone is facing this situation. And I think their actions is showing that they don't know how to deal with it. They are waiting for things to happen first and then to see what they are going to do.
Here's a good question from Michael. He says, how are we, I think it's just in general, how are people going to live at the standard of living that they can afford? And that doesn't, I guess it applies to the United States, Canada, France, obviously any place where it seems like the debt levels have been increasing almost throughout the globe, except a couple of exceptions. So what's your take, guys, on that? More debt seems like that's prevalent.
Sorry, do you mean more debt?
More debt for just about every country, so
yes.
The standard of living probably has to come down.
I see. Places. I think the problem with this statement about the debt, the problem is not only financial, or I don't think it has to do only with the stock market. It is also social. Remember, in a few years, the baby boomers will be going into retirement. What will happen with the social security systems in all of the Western world? This is something that we have to monitor now, that we have to evaluate now. This is going to be very difficult for Western societies. They would have to live with debt in the future.
Right. I think this is going to be the last question, and I'll give both of you closing comments, because there are two questions, one from David and one from Andrew. They both basically say the same thing. Andrew says the euro's broken, don't kid yourself, and then David says, so do you see the euro going to parity against the dollar? What do you think? Is this just going to be a problem just for many, many currencies?
John, do you want to take this one first, and then I will say my opinion?
I'll let you close it, Fotis.
We can't hear you, John.
Parity, yeah.
Yes, hello?
John?
Whether or not the euro goes to parity, can you hear me?
Yeah, now
yes,
you can hear
now.
Okay, cool. Sorry about that. Whether or not the euro goes to parity, I'm not going to go so far as say inconsequential. What I'm more concerned with is the volatility and the range behind those, okay? Because for as articulate and eloquent as Fotis has talked today, and for as comprehensive as both of he and I have provided a backdrop, the market is a very dynamic place that can factor a process or distill information in ways that we may not deem rational. And so I'm more concerned about does the euro have the kind of volatility to go to parity or rally back to all-time highs at 160? That is a more pressing concern in terms of if it has that kind of range, it's going to be replete. It will be replete with opportunity, and I'll be there and I'll do quite well. It's a euro that stagnates and really remains directionless that I find far more vexing and concerning.
Good point. John, that's a great point, right? Opportunities you want to, because it's hard to predict what's going to happen 36 months from now. If it's going to go to parity, it's not going to happen in a month. That's a great point. That's a great point. Great point. All right, guys. I want to give both of you some the ability to have a closing comment. So, Fotis, why don't you start, and then, John, you can wrap it up, and then I'll do the final wrap-up.
I'm just going very quickly in the last question. I'm just going to say I think a level that I would watch for the euro is the area between 132.50 and 133.50. This is a very important area. If markets move below that, below this area, if euro moves below this area, then I would think that maybe we are in a long-term downturn, and who knows? Maybe, as John said, in 24, 36 months we could see parity. I also want to say to everybody that it is very important to try to see the whole picture when you are trying to analyze a financial crisis. The problem, in order to understand what is happening, is not only financial or economic. You have to understand the politics. You have to understand the international relations of what is going on. And my last two pieces of advice is don't believe too much what is said on the news. And just do your homework and watch for signs of what we talked about. That's it.
Thank you. Fotis, thank you very, very much. I want to give John one last moment to have a closing comment.
Thank Steve Meisinger and the ISC for pushing the educational envelope once again and bringing on, Fotis and myself. And thank Fotis, who I think he's now on Wednesday, if I'm not mistaken here. We're pretty darn close to Tuesday. And for that, to thank him for his passion and dedication. I want to remind everyone I have a live trading event on next Tuesday. Go to osoktrading.com to sign and watch me put my money where my mouth is. And I look forward to, I think Steve and I, we have another one of these coming up, Surviving a Volatility Drought, which will be sometime the end of June. We'll update you on how these positions have gone and share with you some more insight, which this ICE provides a great venue to make that happen. Thank you so much, Steve, and thanks to everyone for attending.
Thank you, everybody.
Thank you, guys. I want to thank Fotis Papatheofanous. I want to also thank John Netto. Fotis, I hope I didn't mispronounce that.
No, it's okay. Don't worry. Fotis is fine.
Okay. I just want to thank both of you. You guys did a great job. Nice partnership there. We got a great background of where we came from with the euro, currency markets, and that's really helpful. And so, Fotis, thank you so much. And yes, John's going to be back with us in mid to late June, so looking forward to that. And John's point was just an excellent point. If you're looking for parity, it's not going to happen in a month or two, and there's going to be some great trading opportunities no matter what your view is. Whether if you're a short vol player, think about limited risk ways to trade that. If you're a long vol player, well, it's pretty simple. There's some simple strategies that you can implement. Remember, this product is out there. We do webinars each week. We have trade alerts. We have an FX Options TV. I do a lot of presentations, bring in special guests like John and Fotis and many other people. This is recorded, so you can come back and listen to it. Thank you. I want to thank both of you, and I want to thank all the attendees for great questions. Thanks so much, guys.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.